You're watching Silver News Daily. Subscribe for more. Did you know that silver's price could skyrocket to $500? I know it sounds outrageous, but in today's video, we're diving into the reasons why this might actually happen. From historical trends to current market conditions, there are several compelling factors pointing towards a massive silver surge. So stick around to discover why silver could be your best investment yet.
Multiple cycles here that I'll be really honest with you, Jesse. I think there are times when you do not want to be invested in global natural resource and commodity markets. Yes, if you run a hedge fund, they'd be a good opportunities in those periods when commodities get relatively overvalued, and we can talk about that overvaluation, which the last great overvaluation peak occurred back between the end of 2010 and 2011. And of course, that was a great time to get out of commodity markets. If you're a hedge fund, you can use the shorting mechanism, but for those that are interested in long only, that there are times when you want to be involved and there are times when you don't want to be involved. Now, conversely, as I mentioned, 2010, 2011 was a time that you didn't want to be involved in the commodity markets. And today is exactly the opposite. Today, commodities based upon our valuation work, and we can talk about that. We reprint a graph in our quarterly letters that we refer to all the time, the relationship between commodity returns and the level of financial assets as measured by the stock market. Commodities have never, ever been more cheap. And the thing is that this is the time, and it's great that we're having this conversation because this is the time that you want to be making these investments. And of course, no one's doing it. Everyone is investing in AI, the NASDAQ 100, ETF, the open interest on that goes up every day, and there's absolutely no interest in this space whatsoever. That will change this decade, and that's where your value and your.
Before we get into the exciting future prospects of silver, let's take a step back and understand its historical significance. Silver wasn't just the first ever currency. It has played a crucial role in the financial systems of civilizations for thousands of years. From ancient coins to modern bullion, silver has been a trusted store of value. But what makes silver so special, and why is its history so relevant today? Throughout history, silver has experienced remarkable price movements during times of economic upheaval. For example, the Hunt brothers' attempt to corner the silver market in the late 1970s caused prices to soar to unprecedented levels. More recently, during the 2011 rally, silver's price nearly reached $50 per ounce, highlighting its potential for explosive growth. Understanding silver's historical performance helps us see the patterns and recognize the potential for another significant price surge. As we look at the present day, many of the factors that drove these past rallies are aligning once again. This sets the stage for what could be a historic rise in silver prices, possibly even reaching that eye-popping $500 mark.
You could make and India's investment in copper is inadequate even to support its $3,000 per capita GDP. If they want to go to 5,000, they're going to have to double their copper consumption, and they're doing it right now. You can see it in the figures. And there's other emerging markets too. We talked about it, and we wrote extensively in our last letter about Indonesia now is all of a sudden emerging as a huge copper consumer. But anyway, so you have all this copper demand, you have all this investments in renewables, which is happening. It's all copper intensive, so the demand side is very, very strong. And the mine supply issue, we've got lots of mine supply issues, and we've written about this extensively. Everyone now talks about depletion. Some of the best work we ever did copper was back in 2005, 2006 in the first bull market about the depletion issue, which was emerging back then. So, however, that's between now, and I would be surprised if we see copper over $10 in this bull market run here. Long term, it's interesting, and there's a mining entrepreneur out there named Robert Friedland, and Robert Friedland is in the process of introducing two potentially disruptive technologies into the copper business. And one is this whole iPulse technology to basically try to discover hard rock mineral deposits that are significantly below the surface. And ironically, one of the things about the hard rock metal industry, as opposed to the oil and gas industry, the oil and gas industry has had the ability to see tens of thousands of feet below the surface. The hard rock industry has never been able to develop that technology. Ivanhoe Electric's iPulse technology, we believe, has the ability to actually see and image copper deposits that are significantly below the surface, which we completely missed in the past. So we could have, by the next couple of years, we could have a bunch of huge new copper.
Now that we've set the stage with silver's impressive history, let's turn our attention to the current market conditions. The present-day landscape for silver is filled with intriguing developments that could drive prices higher. Recently, silver has shown strong technical support at the pullback low of $28.66. This level aligns with the 50-day moving average and an uptrend line, signaling a possible bottom and opening the door for a bullish reversal. Additionally, silver found support around the May 2021 swing high of $28.75 and the bottom trend line of a falling channel, further reinforcing this key level. But it's not just about support levels. An upside breakout above the 3-day high of $29.73 would be a significant sign of strength. If silver manages to close above last week's high of $30.26, it could trigger a bullish weekly breakout, positioning silver for a sustained rally. While these technical signals are promising, the broader market context is equally important. Rising U.S. Treasury yields have recently made holding silver less attractive, but this trend might not last. The Federal Reserve's uncertain stance on rate cuts adds another layer of complexity, creating a wait-and-see approach among silver traders. Despite these short-term headwinds, the long-term outlook for silver remains bullish. Industrial demand for silver, coupled with its potential as an inflation hedge, makes it a compelling investment. As we navigate these market dynamics, it's clear that silver is poised for a potential breakout, setting the stage for an exciting period ahead.
A little bit of a historical precedence to look at this. And let's go back to the late 1960s, because I've often said that this commodity bull market is going to resemble, I believe, very much what happened back in the 1970s, which there was a huge commodity bull market that took place to the point where by 1980, everyone had to be invested in commodities. I mean, people used to go to cocktail parties and brag about how many Krugerrands they had stuffed in their safe deposit boxes. And so, at that point, that was another great period of commodity overvaluation by 1980. However, by the late 1960s, we were in the same position that we were in today. Commodities had never been more radically undervalued. And the great commodity bull market actually started in 1968, very, very quietly. And it started with something that people don't remember to this day. It was the end of the death of the gold exchange standard. President Johnson, I believe it was March of 1968, quietly convinced Congress to remove the required gold backing of the dollar bill. And it was done very, very quietly. And of course, that's when the commodity bull market started. However, after that happened, even though commodities had entered this bull market, no one's paying attention, there was a huge craze taking place that topped out in the fourth quarter of 1972, and that was the Nifty 50. And of course, the Nifty 50 was very, very similar to the craze that we see today. Basically, it was 50 stocks trading at PEs of 50 times or greater. And everyone had to buy that, and everyone got sucked in, and that was the wrong place to be. And of course, the Nifty 50 was going on when the commodity bull market already started. Nixon took the U.S. off the Bretton Woods gold exchange standard in 1971, and gold ran from 35 up to about 150 in the next year and a half, even in the face of, the Nifty 50 bull market still raging. So the thing is, I think there's an interesting parallel. You could say we're somewhere between 1971 and 1972 right now, and of course, that was a great time to be invested in commodities, and it was
To better understand silver's potential, let's delve into a detailed technical analysis of its price movements. This will help us see why many experts believe silver is on the brink of a significant bullish reversal. First, let's look at the retracement low of $28.66. This level didn't just hold due to a single factor. It found support from multiple technical indicators. It aligns with the 50-day moving average, which is a critical trend indicator. Moreover, this level also matches the uptrend line, providing additional support and suggesting a potential reversal point. Now consider the significance of the 3-day high at $29.73. If silver breaks above this level, it would signal an end to the current downtrend and indicate a new phase of strength. This potential breakout is underscored by the pattern of inside days observed on Friday and Monday, suggesting a buildup of energy for a decisive move. Next, last week's high of $30.26 is another critical level to watch. A rally above this point would not only mark a bullish weekly breakout, but also reinforce silver's position above the 20-day moving average at $30.40. This moving average has acted as a key trend indicator, and reclaiming it would be a strong bullish signal. These technical indicators suggest that silver is poised for a potential rally. However, it's essential to remember that while these signs are promising, the market has yet to confirm a definitive breakout. Traders and investors should keep a close eye on these levels and be ready to act when the signs of strength materialize. As we monitor these technical signals, it's clear that silver has the potential to embark on a significant upward trend, possibly setting the stage for a historic rally.
Discoveries that out there now, whether they come on fast enough, we'll have to wait and see. But the other thing is that he's introducing this IROX technology too, which could very well change the ability to mine lower grade sulfide ore. And the reason I point this out is because most people don't remember this. The copper industry has been subject to disruptive technologies in our institutional memory. SXEW, solvent extraction electrowinnowing technology, was introduced into the copper business in the late 1980s, which allowed copper companies for the first time to mine and basically extract low-grade oxide copper ore from ore deposits, which over the last 100 years, they knew where all these oxide deposits were, but they couldn't produce them because oxide deposits is not amenable to flotation technology, which is the classic method by which you separate copper from sulfide material. So the thing is that all of a sudden, SXEW copper was rapidly adopted, and SXEW oxide copper went from 0% of global copper production in 1990 to representing by the early 2000s 22%. 22%. So are we on the verge of a new surge of investment, productive investment in copper that goes to find? Maybe we're going to learn how to mine low-grade sulfide ore. There is plenty of low-grade sulfide ore in the world. All those mine pits, the reason the sidewalls of those mines are not mined, it's filled with copper ore, but it's low grade. Can we learn to actually mine it in a cost-effective way through maybe Friedland's IROX technology? Maybe something to really monitor. And second, iPulse technology. Will we be able to find a whole new generation of extremely large copper deposits greater than 200 feet below the surface?
While technical analysis provides crucial insights, it's the broader economic indicators that also play a vital role in silver's future. Let's explore some key economic factors that could significantly impact silver prices. One of the primary factors influencing silver is the rising U.S. Treasury yields. Higher yields increase the opportunity cost of holding non-yielding assets like silver, thereby putting downward pressure on its prices. However, this trend might be temporary. The Federal Reserve's stance on interest rates is currently uncertain, with mixed signals from Fed officials about potential rate cuts later in the year. If the Fed decides to cut rates, it could lower the yields on treasuries, making silver more attractive as an investment. Another critical economic indicator to watch is the performance of the U.S. dollar. A stronger dollar typically weighs on silver prices, as it makes the metal more expensive for foreign investors. Conversely, if the dollar weakens, silver prices could benefit significantly. Currently, market indecision about the Fed's next moves and upcoming economic data releases, such as retail sales and PMI data, are crucial in determining the dollar's direction. In the long term, silver's appeal remains strong due to its industrial demand and its role as a hedge against inflation. Industrial applications for silver, particularly in electronics and solar energy, ensure a steady demand for the metal. Additionally, in times of economic uncertainty and inflation, investors often turn to precious metals like silver to protect their wealth. Despite the current headwinds from rising yields and a firm dollar, silver's long-term outlook remains bullish. Investors should keep an eye on the Fed's actions and economic data releases, as these will provide valuable clues about the future direction of silver prices. The interplay between these economic factors could create a favorable environment for silver, setting the stage for the potential price surge we've been discussing.
Of gold markets for a very, very long time, and we've had some really interesting calls on it. In fact, back in I don't know whether you could show this. Back in 19, this is interesting. I mean, I'm going to bring this up because this is important because the numbers that I'm going to start throwing around the gold market, everyone said, you're out of your mind. You don't know what you're talking about. How can that be? But I'm going to show you that based upon our research and all the deep research we do in market cycles and historical valuation relationships, that we come up with numbers and we're willing to put them in print and they sound crazy at the time. And this is probably one of the craziest ones of all. I was profiled in Forbes magazine back in, I believe it was May of 2000, when gold is $275 an ounce. And in the reporters finally got me to admit what was my price target, and I said 2,500. Now, there was a very famous gold bear out there who named Andy Smith, who actually used to publish a very famous piece called Precious Thoughts on the gold market. He dedicated like a half of his Precious Thoughts piece one day saying that I had lost my mind. And the thing is that, but how good was that call? Well, it was pretty darn good. 275 in May of 2000 turned into a $1,900 gold price at the end of 2011. And gold was the best performing asset class during that decade. Now, the thing is, if you want to use those same valuation techniques that were behind that $2,500 target, we didn't hit it, but $1,900 is pretty close, is that you could make the case that gold could go anywhere between 15,000 and 25,000 this cycle. That's how big this gold market could be. And it's going to be based upon a couple changes that are taking place that absolutely no one is talking about. And one of our big beliefs in the gold market and why gold has entered in a huge bull market is there's going to be an upcoming monetary regime change in the next it taking place at any point. And you say, well, why, what gives you such confidence that you're going to say that? Well, I would point out that every time the commodity prices have been radically undervalued relative to financial assets, the late 1920s, the late 1960s, and the late 1990s, each time had a huge.
Now let's delve into the industrial demand for silver and why it plays a crucial role in supporting its long-term bullish outlook. Silver is unique among precious metals because of its extensive industrial applications. It's a critical component in various industries, particularly in electronics and renewable energy. For example, silver's excellent electrical conductivity makes it indispensable in the production of solar panels and electronic devices. As the world continues to shift towards green energy, the demand for silver and solar technology is expected to grow significantly. The solar energy sector is one of the largest consumers of silver. Photovoltaic cells, which convert sunlight into electricity, use a considerable amount of silver. With global efforts to combat climate change and reduce carbon emissions, investment in solar energy is on the rise. Countries around the world are setting ambitious targets for renewable energy production, which bodes well for silver demand. In addition to solar energy, silver is extensively used in the electronics industry. It's found in everything from smartphones and laptops to cars and medical devices. As technology advances and the demand for electronic devices increases, so does the need for silver. This consistent industrial demand helps to underpin silver prices and provides a solid foundation for its long-term value. Furthermore, silver's role as a hedge against inflation adds another layer of appeal for investors. In times of economic uncertainty, precious metals like silver are often seen as safe haven assets. With concerns about rising inflation and economic instability, investors may flock to silver to protect their wealth, driving prices higher. This combination of strong industrial demand and its function as an inflation hedge makes silver a compelling investment. The ongoing advancements in technology and the global push towards renewable energy ensure that silver will remain in high demand for years to come. As these trends continue to develop, they will provide robust support for silver prices, contributing to the potential for a significant price surge. As we continue to explore the various factors influencing silver's market, it's clear that industrial demand is a key pillar supporting its bullish outlook. This demand, coupled with other economic indicators, reinforces the possibility of silver reaching unprecedented price levels.
Structural uh, structural deficit. And I said, like, where did you get that from? Well, it's lifted right out of our letter. So the thing is that the underlying fundamentals are actually stronger today than they were 4 years ago. And that's driven by, one of the things we love to do is we love to do like this very, very in-depth research. And not only do we do it on the supply side, but we also do it on the demand side. Most people don't do any demand work because it's complicated. You have to have like a metaphysical approach to the whole thing. Like what influences demand? What causes demand to increase to decrease? And we actually try to answer that. And one of the interesting things about uranium is that, you go back and read our stuff 4 or 5 years ago, we outlaid it. I think it's some of the best research we ever did. We said renewables never work. They'll never work. Now we used entirely different investment framework and modeling to try to prove that. But for those that should go back and read our letters, and for those that are like grants, interest rate subscribers, Adam and I presented at a grants conference. I think it was a year, 2 years ago. I think it was one of the best presentations we ever did, and we outlaid why renewables would work. But if you're a believer that CO2 is causing climate change, and that's a real problem, that means renewables aren't going to solve the problem. In fact, renewables actually make it worse because their energy inefficiency is so bad. But nuclear power is the solution. And what's interesting, that solution is now being grasped. I mean, Oliver Stone at Davos is running around saying, look, you got to build nuclear power plants, and he's correct. So the demand side is getting stronger and stronger. So there's another huge leg up. I think it's going to be driven next point because Kazatomprom is going to make an announcement at some point in the next month about their 2025 production ability, and I believe it's going to disappoint, and that could set another huge chaotic move upside in uranium prices. So we're still bullish. We're not as comfortable as we were back 2 years ago. We got company in that trade, and I have to admit we've actually been selling some of our stocks, but I still think they're heading up.
Another critical aspect of silver's market dynamics is the role of speculators and how their actions can impact price movements. Speculators often amplify price volatility, driving both rapid price increases and sudden declines. Let's delve into how speculator behavior has recently influenced silver prices and what it could mean for the future. Historically, speculators have had a significant impact on silver prices. During the 2011 silver rally, for example, a lack of speculative long positions contributed to a more sustainable price increase. In contrast, when speculation is high, it can lead to quick, unsustainable price spikes followed by sharp corrections. Recently, the silver market has seen a noticeable shift. There was an excessive number of speculators betting on the long side, which contributed to the big rally in early 2024. However, these consensus long positions prevented silver from moving much higher in the short to medium term. The market often moves against the majority, and when too many traders are positioned in one direction, it can signal an impending reversal. Interestingly, there are signs that speculators are now starting to give up on their long positions. This capitulation is evident from the recent large red candles on the silver price charts, indicating significant selling pressure. When speculators exit the market, it can clear the way for a more stable and sustainable price rally. This pattern is not new. The historic 2011 silver rally occurred without significant speculative participation, suggesting that a more organic and sustainable price increase is possible when speculators are less involved. As speculators continue to exit their long positions, the silver market may be setting up for a more robust and prolonged rally. For those closely watching the silver market, this development is crucial. The reduction in speculative positions could be a prelude to a significant upward move in prices, especially if other market conditions align favorably. Investors should monitor speculator activity closely, as it can provide valuable insights into potential future price movements. As we consider the impact of speculators on the silver market, it becomes clear that their behavior plays a pivotal role in shaping price trends. With speculators currently stepping back, the stage may be set for a more sustained and substantial rally in silver prices. This dynamic, combined with strong industrial demand and supportive economic factors, reinforces the bullish outlook for silver.
At Goehring and Rosenzweig, we like to pick the bear markets and commodities, and the reason most people don't try to do it is because it's a career ruiner. You get it wrong, everyone says, you idiot, why in the world did you ever try to do that? Everyone's bearish. What makes you think you could be bullish? Well, if our followers know, we do an incredible amount of research, and you complimented us before. And one of the things is that the uranium market explains perfectly what we try to accomplish. We turned bullish in uranium in the first quarter of 2018, right after uranium prices bottomed at $18 a pound in the fourth quarter of 2017. And we wrote three great large pieces on why the uranium bull market started, and we invested right at the bottom. I mean, At the time, no one had an interest, and you could buy a stock like Cameco at $9 a share, $20 discount to book value. That's why we try to pick bottoms, because that's where the value really is. Today, the uranium, what's so interesting about our modeling of the uranium business today versus what we did back in 2018, they don't look the same. The underlying fundamental story today in uranium is much more positive today than it was back then 4 or 5 years ago. So the thing is that I think the uranium bull market still has one massive leg left to run. And the thing is, however, the valuations aren't cheap. Cameco, you could have bought all you want of Cameco at $9 a share. Now you're going to pay 50. So the thing is Kazatomprom, the world's largest uranium producer, you could have bought that at $9 a share in the fourth quarter of 2018, and now it's 42. So the thing is that the underlying fundamentals are there, but the valuations are not as extreme as they were. And it's funny, the uranium market has actually caught the attention of the hedge fund community. A lot of hedge funds are chattering back and forth, and it's funny that these quotes appear in Bloomberg, and like they say, "Wow, uranium has entered into a structure."
To further understand the potential for a significant silver rally, let's compare the current market setup to past silver rallies, particularly the historic 2011 rally. By examining these patterns, we can identify similarities and differences that may signal a major price movement. The 2011 silver rally is a prime example of how silver can experience explosive growth. During that time, silver prices nearly reached $50 per ounce, driven by a combination of strong industrial demand, economic uncertainty, and a favorable market environment. One crucial aspect of the 2011 rally was the relatively low level of speculative long positions, which allowed for a more organic and sustainable price increase. In contrast, recent speculative activity has been more pronounced, initially causing rapid price movements, but also leading to heightened volatility. As we discussed earlier, the exit of speculators from their long positions can set the stage for a more stable rally. This pattern is reminiscent of the 2011 rally, where the lack of speculative overhang contributed to sustained price growth. Another similarity between now and the 2011 rally is the role of economic uncertainty. Back in 2011, global financial instability and fears of inflation drove investors towards precious metals like silver as a safe haven. Today, we see similar concerns with rising inflation, geopolitical tensions, and an uncertain economic outlook, creating a fertile ground for silver investment. Additionally, technical factors in the current market are aligning in a way that could mirror the conditions of past rallies. As we've noted, key support levels and potential breakout points are providing signals that a bullish trend may be developing. This technical setup, combined with the economic backdrop, suggests that silver is poised for a significant move. While history doesn't repeat itself exactly, it often rhymes. By studying the conditions and patterns of the 2011 rally, we can better understand the current market dynamics and the potential for a similar surge. The parallels are striking, and they provide a compelling case for why silver might be on the verge of another historic run. As we continue to monitor these developments, it's important to recognize that the current market environment shares many characteristics with past successful rallies. This historical perspective reinforces the possibility that silver could reach unprecedented levels, driven by a combination of technical, economic, and speculative factors.
It basically is somewhere between 3 to 6 pounds of grain to do it. So the thing is, that is in process. And you go back in some of our letters, there's some really, really neat graphs that show this relationship historically at work in a lot of emerging market countries. And this phenomenon is not at all done. And the thing is that global grain consumption continues to surprise the upside because of that the wealth factor. But the funny thing is that we've had this big shift up in global grain consumption since 2000, but it's also been met by an unprecedented stretch of great global growing crop conditions. So we've been able to meet that increase in grain consumption because of great weather. And we believe that the weather patterns are changing. Like, all you have to do is turn on the TV, front page of the New York Times, editorial page of the New York Times, is that, oh my God, climate disaster is subsuming us. Never has weather been more violent, which I don't quite agree with, but there's been a lot of very interesting weather phenomenon. I think we're entering a period of off the chart weather volatility. And part of it is based upon hopefully your listeners don't think I'm falling off my rocker here. But I'm a big believer that a lot of the weather is influenced by sunspot cycles. And over the last 50 years, we've been in an unprecedented period of very strong sunspot cycles, which you could argue maybe that's behind global warming. But what's interesting about the other thing about global warming, contrary to what you read in the press, global warming is extremely good for global crop growing conditions. And you go back in our letters and we've talked all about that. And that's behind, I think it's one of the reasons behind global grain yields keep marching relentlessly forward. Genetics and increased fertilizer applications are big on it too, but it's one of the big factors. I think weather's changing. And I think we're getting a taste of what volatile weather will bring. And we've lucked out in the last couple of years. Like Brazil had a huge drought in its northern crop growing area last year, and they got rain just in the nick of time to save the soybean crop. Last year, we've had multiple years of very dry conditions in the Midwest, near drought conditions, and we just got rain just at the right time last summer in August to save the corn crop. One of these times you're going to miss that. And of course, if you really want to, okay, now you think this guy's really off his rocker, is that there's an interesting pattern in sunspot cycles called the...
Let's turn our attention to expert predictions and insights, which add another layer of credibility to the bullish outlook for silver. Industry experts and market analysts have been closely watching the developments in the silver market, and many are forecasting a significant price surge. One notable prediction comes from John Rubino, a well-respected financial analyst who has been vocal about silver's potential. Rubino and other experts believe that silver is severely undervalued given its industrial uses and historical significance as a precious metal. They argue that the current market conditions are setting the stage for silver to climb to new heights, potentially reaching $500 per ounce. In recent reports, analysts highlight several factors supporting this bullish outlook. For instance, they point to the ongoing industrial demand, particularly from the renewable energy sector. As global efforts to combat climate change accelerate, the demand for silver in solar panels and other green technologies is expected to soar. This sustained industrial demand creates a solid foundation for higher prices. Moreover, experts emphasize the role of silver as a hedge against economic uncertainty. With inflation concerns and geopolitical tensions rising, investors are increasingly looking to silver as a safe haven asset. This trend is likely to continue, driving more investment into silver and pushing prices higher. Another critical point made by experts is the historical performance of silver during times of economic instability. Past rallies, such as the one in 2011, demonstrate silver's potential for rapid and substantial price increases. Analysts believe that the current market setup bears similarities to these past events, suggesting that a major rally could be on the horizon. Experts also note the reduction in speculative positions, which we discussed previously. This shift could lead to a more stable and sustained price increase, as seen in past rallies. The exit of speculators is viewed as a positive development, clearing the way for a more organic price movement driven by genuine demand. These expert predictions and insights provide valuable context and reinforce the bullish narrative for silver. By understanding the perspectives of seasoned analysts, we gain a clearer picture of why silver is poised for a significant price surge. As we consider these expert opinions, it becomes evident that the potential for silver to reach $500 is not just speculation, but a well-founded projection based on current market dynamics. As we move forward, these expert insights will be crucial in shaping our understanding of the silver market and its future potential. The combination of industrial demand, economic uncertainty, and favorable market conditions creates a compelling case for a historic rally in silver
Jesse,
prices.
about how back in 2018 we wrote all these bullish pieces on uranium. Not one person paid attention, at least the investment side. The insiders on the commercial side did. But the thing is that it's the same position in natural gas. One of the things that we like to do in investing, it's based upon our research product and the research that we do. And our research often, like I mentioned, I talk about what I do, like a standard investment pitch to a potential investor. I say, the more a bear market grinds on, the more valuations get depressed, the more the companies become pessimistic and believe it's never going to occur, the more we like to roll up our sleeves and do a lot of work in that area and try to find trends that have emerged that no one else has recognized that tell us that that bear market is nearing an end and a new bull market's about to start. And everything I just said applies to the natural gas market. Obviously, the natural North American natural gas market has been dislocated from the global natural gas market for going all the way back to basically 2010. And that was the great surge, the second great surge of the shale gas revolution in America, which has been nothing but spectacular. Classic American ingenuity, to the point where, you know, 2005, people forget the US was like the third largest LNG importer. Now, starting in 2016, we started export LNG, and now we are the world's largest LNG exporter. And that's all because of the shale gas revolution. But one of the things that's interesting is that the price of gas outside the United States still sits 80% higher than the price here in the United States. And we believe that that's going to change. And it's going to change because of some of the research that we've done that no one else has attempted to do. And I think it's what from a value add standpoint that we bring to the table. And what I'm referring to is that the reason why the natural gas market in the U.S. has been in what I would call structural surplus for the last decade is because of three huge shale gas development projects. One was the Marcellus, the second was the Haynesville, and the third was the associated gas that came out of the Permian. And those fields have grown so hugely over the last decade that those three fields now account for almost 65% of U.S. gas production. The U.S. gas production has never been so concentrated in three fields. And we believe, based upon our research, that the huge ramp ups in production that took place starting in 2010 in all those fields is now plateauing and is about to roll over and begin to decline. And so you combine that with the fact that in the next year, we're going to bring on an additional 6 BCF of LNG, new LNG capacity. Supply is going to stop growing. Then all of a sudden, that U.S. gas molecule, which is trading at an 80%.
In addition to expert insights and predictions, it's essential to consider the broader global economic factors that could drive silver prices higher. These factors provide the context within which silver operates and highlight why it remains a compelling investment. One significant factor is geopolitical uncertainty. Tensions in various regions of the world can lead to instability in global markets, prompting investors to seek safe haven assets like silver. For instance, ongoing conflicts, trade wars, and political instability can create an environment of uncertainty, pushing more investors towards precious metals to protect their wealth. Moreover, global economic policies and central bank actions play a crucial role in shaping the silver market. Central banks around the world have been accumulating gold and silver as part of their reserves, indicating a shift towards precious metals as a hedge against economic instability. This trend is particularly noticeable in countries like China and India, where central banks are increasing their precious metal holdings. Inflation is another critical factor. As central banks implement expansive monetary policies to stimulate economic growth, inflation rates are rising. Silver, like gold, is often seen as a hedge against inflation. When the purchasing power of fiat currencies declines, investors turn to silver to preserve their wealth, driving up its demand and price. Additionally, the weakening of major currencies, especially the US dollar, can significantly impact silver prices. A weaker dollar makes silver cheaper for foreign investors, increasing its demand. Given the current economic landscape, with uncertainties around the Federal Reserve's policies and potential rate cuts, the dollar's strength is a key variable to watch. Furthermore, the push for green energy and technological advancements continues to bolster industrial demand for silver. The transition to renewable energy sources, including solar power, heavily relies on silver for its superior conductive properties. This sustained industrial demand, coupled with its role in various technological applications, ensures a steady baseline of demand that supports higher prices. These global economic factors collectively create a favorable environment for silver. The interplay between geopolitical tensions, central bank policies, inflation, and industrial demand sets the stage for silver's potential rise. Investors looking to hedge against economic uncertainties and benefit from industrial growth see silver as an attractive investment. Understanding these broader economic dynamics is crucial for appreciating the potential for silver's price surge. As these factors continue to evolve, they will likely provide strong support for silver, contributing to its long-term bullish outlook and reinforcing the possibility of reaching the $500 mark.
Post the Russian invasion of Ukraine, they've given a lot of it back, and they're trading at PE levels of 7, 8, where the market's 25 times, and like you said, no one cares about it. The global agricultural market is shifted, we believe, and we've written extensively about this, into a I would call a bull market that's going to be characterized by crises. And the underlying fundamentals of that bull market is that if you go back over the last 50 years and you look at global grain consumption, is from say the mid 1960s all the way to 2000, it basically grew in line with population. People weren't eating more. And there's a good reason for that. We'll talk about that in a minute. But the funny thing now is that post 2000, global grain consumption is basically, the whole curve has shifted up. It has basically doubled what population growth is. And why is that? Well, that's because huge swaths of the global population that were poor have now in the process of going into the middle class. And when you go from being poor to middle income and then ultimately rich, which is a very, very difficult path to trek. Very few countries in the last since the end of World War II has actually made that transition from poor to rich. Japan, South Korea, Singapore, Spain, Portugal, and Chile's on it as well. You can stretch it a little bit. But the funny thing is, as you go from poor to middle class, there's a lot of things that you change. You change, like one of the things, you change your energy consumption. You go from riding around bicycles when you're really poor to mopeds to motorcycles to Toyotas to Mercedes. And that winds up in a measurable increase in oil consumption. And that's going on in China since 2000. That's one of the reasons why China has surprised on the upside every year as far as global oil, because of that phenomenon I just mentioned. The company is going to follow that as India. But the other big thing that changes as you get rich, you want to change your diet. You want to go from a starch-based diet to a protein-based diet. And the funny thing is that one of the interesting things about protein, especially animal protein, which we all love here in the West, animal protein, is that it requires a lot more grain. Depending on who you believe, to produce 1 pound of animal protein.
As we continue exploring the factors that could drive silver prices higher, it's crucial to compare silver's performance and potential with other precious metals and commodities. This comparison will highlight why silver is uniquely positioned for significant growth. First, let's consider gold. Gold is often seen as the primary safe haven asset, especially during times of economic uncertainty. However, silver offers a unique combination of properties that make it an attractive alternative. While gold is primarily a monetary metal, silver straddles both industrial and monetary uses. This dual role provides silver with additional demand drivers that gold does not have. For instance, while gold is heavily influenced by investor sentiment and central bank policies, silver's price is also driven by its extensive industrial applications. The demand for silver in electronics, solar panels, and medical devices creates a consistent and growing need for the metal, beyond its use as a store of value. This makes silver less susceptible to the same market forces that affect gold alone, offering a more diversified investment opportunity. Platinum and palladium are other precious metals often compared to silver. These metals also have significant industrial uses, particularly in the automotive industry for catalytic converters. However, their markets are much smaller and more specialized compared to silver. Silver's broader industrial applications and larger market make it a more versatile and potentially more stable investment. Comparing silver to other commodities like copper, we see additional advantages. While copper is essential for electrical wiring and various industrial applications, its price is more directly tied to the overall health of the global economy and infrastructure spending. Silver, on the other hand, benefits from both its industrial uses and its status as a precious metal. This dual demand provides a buffer against economic downturns that might impact commodities like copper more severely. Moreover, silver has historically shown the ability to outperform other commodities during periods of high inflation and economic uncertainty. Its lower price point compared to gold makes it more accessible to a broader range of investors, particularly those looking for a hedge against inflation or a safe haven asset. This accessibility can drive higher demand, especially during times of market stress. Finally, the historical price ratios between silver and gold suggest that silver is currently undervalued relative to gold. The gold-to-silver ratio, which measures how many ounces of silver are equivalent in value to 1 ounce of gold, is currently higher than historical averages. This indicates that silver has more room to appreciate compared to gold, presenting a potential investment opportunity. In summary, silver's unique combination of industrial and monetary uses, broader market, and accessibility make it a compelling investment compared to other precious metals and commodities. Its potential for significant price appreciation is supported by multiple factors, making it a standout choice for investors looking to capitalize on the current economic environment.
Things is that if you go study the period where precious metals have basically been freely traded without price restrictions, so you go back to 1971. One of the interesting things about every gold bull market since then has been characterized by two things. One is that silver lags. Silver does not lead bull markets, it lags the bull market. And then just as the bull market in gold is about to top out, where the big bull move in gold is about to top out, silver stages a furious catch-up rally, which is a good signal that you're going to enter either to a huge bear market in gold or a huge period of correction. And I'll outline the three instances. 71 into 73, gold appreciated 35 all the way up to $165, $170 an ounce. Silver lagged the entire way. Then in the end of 73, 74, silver staged this massive catch-up rally, caught up with gold, surpassed it, bang. That was the end of that gold bull market, or the first leg of the bull market. Gold pulled back 45% in the next year and a half, 2 years. Between 1977 and 1980, silver lags the entire way until the fourth quarter of 1979 when the Hunt brothers get involved and silver stages a massive catch-up rally, outperforms gold, and that by January of 1980, the gold bull market is over for the next 20 years. And again, in 2011, 2012, again, silver played a huge catch-up rally after lagging that whole gold bull market. Gold pullbacks 45%. So now it's interesting, between 2018 and 2017, gold had a nice bull move. Silver lags the whole way. Then it does this massive catch-up rally again, and that's it. And we said, okay, we're out of the gold market. Gold market's going to go through this period of correction, which it started, but it's been truncated because of all the central bank buying. So again, this bull gold market has started. It's driven by central bank buying. And what's lagging again? Silver's lagging. Silver will continue to lag. Now, if you're a speculator, buy gold. And then when you feel that this gold market is going to be ending, so I'm talking about 3 or 4 years away at minimum, then you want to get involved in the silver market. But gold is doing what it's always done. It's leading, and silver is lagging. Now, that doesn't mean it's not going to, in the end, silver will outperform, but it's going to do that massive catch-up move.
To further bolster our understanding of silver's potential, let's dive into the future speculation and scenarios that could lead to silver reaching the $500 mark. By examining these speculative elements, we can see the pathways through which silver might achieve such a significant price surge. 1. Economic crisis and safe haven demand. A global economic crisis, triggered by factors such as geopolitical tensions, financial market instability, or severe economic downturns, could drive investors to seek safe haven assets. Silver, along with gold, would benefit from this increased demand as investors look to protect their wealth. The heightened demand could push silver prices higher, possibly reaching unprecedented levels. 2. Inflation surge. If inflation rates soar beyond current expectations, the demand for inflation hedging assets like silver would increase. Historical data shows that during periods of high inflation, precious metals tend to perform well, with central banks continuing to inject liquidity into the markets and maintaining low interest rates. The risk of runaway inflation remains. Such a scenario could see silver prices skyrocketing as investors flock to it as a hedge against devalued currencies. 3. Industrial demand boom. The ongoing transition to renewable energy and advancements in technology significantly boost the industrial demand for silver. Solar panels, 5G technology, and electric vehicles all rely heavily on silver. As these sectors grow, the demand for silver could outstrip supply, leading to higher prices. Major green energy initiatives and government policies aimed at reducing carbon footprints could further accelerate this demand, driving prices upward. 4. Supply constraints. Silver mining faces several challenges, including environmental regulations, higher production costs, and depletion of easily accessible silver deposits. If these supply constraints intensify, it could limit the availability of silver in the market. A supply-demand imbalance would naturally lead to higher prices. Additionally, any geopolitical events that disrupt mining operations in key silver-producing regions could exacerbate supply issues and contribute to a price surge. 5. Monetary policy shifts. Changes in monetary policy, particularly in the United States, could have a profound impact on silver prices. If the Federal Reserve decides to implement further rate cuts or adopts a more dovish stance, it could weaken the U.S. dollar. A weaker dollar typically boosts the prices of commodities, including silver, as they become cheaper for foreign investors. Such monetary policy shifts could be a catalyst for significant price movements in silver. 6. Technological innovations. Technological advancements that increase the efficiency of silver use or create new applications could spur demand. Innovations in electronics, medical devices, and other fields where silver's properties are crucial could lead to a surge in industrial demand. As technology evolves, the discovery of new uses for silver could provide a continuous boost to its demand, supporting higher prices. 7. Investment trends. A shift in investment trends towards precious metals, driven by financial advisors, investment firms, and retail investors, could create a wave of new demand for silver. If silver gains popularity as an investment vehicle, similar to how gold ETFs have grown, the influx of capital could drive prices higher. Increased marketing and education about silver's benefits as an investment could play a significant role in this trend. The speculative scenarios outlined above illustrate the various pathways through which silver could achieve a significant price surge. Each scenario highlights different factors that could contribute to a higher silver price, from economic crisis and inflation to industrial demand and supply constraints. As we monitor these developments, it becomes clear that silver has multiple avenues to reach the $500 mark, making it a highly intriguing investment opportunity. Investors should keep an eye on these speculative elements and consider how they align with their investment strategies. The combination of historical performance, current market dynamics, and future speculation presents a compelling case for silver as a potential standout in the commodities.
Look at what's happening in the copper market. We've talked about the copper has a next huge leg up based upon low inventories. The demand is much stronger than people expected, and we've written all about it. So the thing is, the same thing's going to happen with gas. Copper literally back in January, I think, hit $3.65, and now it broke through $5 yesterday and today. So the same thing's going to happen with gas. And the thing is that no one knows it. The way to do is to play the natural gas equities, the pure ones here in the States. They even though they've had huge runs, and picking at the bottom, we did turn bullish in gas right at the bottom, and you could go back and read our pieces, and the valuations there were radically undervalued. They're not as the gas equities are not as undervalued as they are today, but they're still extremely undervalued. So you have a great commodity bullish picture that I can outlay for you, and the valuations of the equities, the pure plays in that commodity, natural gas commodity, are extremely cheap. I think it's a fantastic place to invest. Now, oil is it's very interesting. Now, again, you can say, well, this guy's crazy, he's off his rocker. If you go back to 2018, 17, 18, 19, there was a lot of chatter among oil market analysts, talking heads, that oil had become an uninvestable commodity. And the reason is that the shales were going to grow endlessly. The EV was going to be adopted radically across the world, and we would hit peak oil demand, starting potentially as early as 2019. The IEAs, were using those figures. Now, the funny thing is, we disagree with that completely. First, we believe the shales are in their twilights right now, just like I talked about the gas shales. The same exists in the oil shales as well. And the funny thing is that not only do you have, and remember, the U.S. oil shales represent almost 80 to 85% of non-OPEC oil supply growth over the last decade, all the way back to 2010. And the funny thing is that's coming to an end, and oil demand growth is just it's surprising to the upside, contrary to what the IEA just put out this morning. They reduced their demand estimates. They underestimated demand last year by 500,000 to 600,000 barrels a day, which continues a streak going back all the way to 2010, except for 2020. So the thing is, demand is very robust. the EV, as you notice, is not taking off. There's a very, very good reason for that, and we've written extensively about that.
As we look towards the future, it becomes evident that silver's potential to reach $500 is supported by a myriad of speculative scenarios. One significant factor is the possibility of a global economic crisis, geopolitical tensions, financial market instability, or severe economic downturns can drive investors towards safe haven assets like silver. History has shown us that during times of crisis, precious metals experience increased demand as investors seek to protect their wealth. This heightened demand could push silver prices to new heights. Another compelling factor is the threat of rising inflation. If inflation rates soar beyond current expectations, the demand for assets that can hedge against inflation, such as silver, would naturally increase. We've seen in the past how precious metals perform well during periods of high inflation. With central banks continuing to pump liquidity into the markets and maintaining low interest rates, the risk of inflation remains high. This scenario could see silver prices skyrocketing as investors look to preserve their purchasing power. The ongoing boom in industrial demand also plays a crucial role. As the world transitions to renewable energy and advances in technology continue, the demand for silver in applications like solar panels, 5G technology, and electric vehicles is set to grow exponentially. These sectors rely heavily on silver, and as they expand, the demand for silver could outstrip supply, driving prices upward. Major green energy initiatives and government policies aimed at reducing carbon footprints further support this increasing demand, adding to silver's bullish outlook. Additionally, we cannot ignore the potential impact of supply constraints. Silver mining faces numerous challenges, including stringent environmental regulations, higher production costs, and the depletion of easily accessible silver deposits. If these supply constraints intensify, the availability of silver in the market could be limited, leading to higher prices. Geopolitical events that disrupt mining operations in key silver-producing regions could also exacerbate supply issues and contribute to a price surge. Monetary policy shifts, particularly in the United States, could have a profound effect on silver prices. Should the Federal Reserve decide to implement further rate cuts or adopt a more dovish stance, it could weaken the U.S. dollar. A weaker dollar typically boosts the prices of commodities, including silver, as they become more attractive to foreign investors. Such monetary policy changes could act as a catalyst for significant price movements in silver. Technological advancements that enhance the efficiency of silver use or create new applications for the metal could spur demand as well. Innovations in electronics, medical devices, and other fields where silver's properties are crucial could lead to a surge in industrial demand. As technology evolves, discovering new uses for silver will likely provide a continuous boost to its demand, supporting higher prices. Investment trends are also shifting towards precious metals, driven by financial advisors, investment firms, and retail investors recognizing silver's potential. If silver gains popularity as an investment vehicle, similar to how gold ETFs have grown, the influx of capital could drive prices higher. Increased marketing and education about silver's benefits as an investment could significantly influence this trend. In conclusion, the speculative elements surrounding silver create a compelling narrative for its potential to reach $500. From economic crisis and inflation to industrial demand and supply constraints, silver has multiple avenues for significant price appreciation. Investors should monitor these developments closely, as the combination of historical performance, current market dynamics, and future speculative scenarios presents a strong case for silver as a standout investment opportunity.
Historically, I've run money for very large institutions, retail people, and we do that at Goehring and Rosenzweig. So if you're ever curious, please contact you, and we can inform you of all our investment product. And however, if one wants to read our research, listen to our podcast, they're all on our website, and we don't charge anything for it. You could just go on there, you put your name and your email address, and you'll be sent everything. And you should enjoy it. If you're interested in commodities, I go back and read our old letters, looking for things that I've written about, and even I look back and say, wow, that was pretty insightful. So the thing is, we don't get it right. We make mistakes, and I admit it, but we also do things that people don't do. We try to look out to the future, and we try to make investments not in what's happening today, but what we believe is going to change positively. So you could definitely you go to our website, read our stuff, listen to our podcast, because we do a lot of podcasts, and you'll get an idea of what Goehring and Rosenzweig is all about.
Silver's historical significance and past performance highlight its enduring value as both a monetary and industrial metal. The technical analysis shows strong support and potential breakout levels, suggesting a bullish reversal. Economic indicators such as rising inflation, geopolitical tensions, and a potentially weakening U.S. dollar create a fertile environment for silver's growth. Industrial demand, particularly from the renewable energy sector, adds another layer of robust, consistent demand. We also discuss the critical role of speculators and how their recent exit from long positions might pave the way for a more sustainable price increase. Expert predictions reinforce the bullish outlook, with analysts highlighting silver's undervaluation and its dual role as both an industrial commodity and a safe haven asset. The comparison to other precious metals and commodities further underscores silver's unique position and potential for significant price appreciation. Investment strategies provide practical ways for investors to engage with the silver market, whether through physical silver, ETFs, mining stocks, futures, or options. Diversification and staying informed are key to managing risks and capitalizing on silver's promising future. Given all these factors, the potential for silver to reach $500 is not just speculation, but a well-founded projection based on historical trends, current market dynamics, and future economic scenarios. As we see the interplay of these elements, it becomes evident that silver is positioned for a significant rally. For investors, this presents a unique opportunity. By understanding that historical context, monitoring current market conditions, and employing effective investment strategies, one can capitalize on the potential surge in silver prices. As always, it's essential to conduct thorough research, stay informed about market developments, and consult with financial advisors to tailor investment decisions to individual goals and risk tolerance. In conclusion, silver's path to $500 is supported by a confluence of historical performance, technical signals, economic factors, and expert insights. This makes it a compelling investment opportunity in the current economic landscape. So whether you're an experienced investor or new to the precious metals market, now is the time to consider adding silver to your portfolio. Remember to subscribe to our channel for more insights and updates on the silver market, and stay tuned for our upcoming videos where we dive deeper into these fascinating topics. And as always, please note that this video is for informational purposes only and does not constitute financial or investment advice. Make sure to consult with a financial advisor before making any investment decisions. Thank you for watching, and don't forget to like, share, and comment below with your thoughts on silver's potential.
Monetary regime take place. And, in 1930, it was Britain going off the gold exchange, the pure gold standard, being forced off, which ultimately required a default of the U.S. government and a debasement of the U.S. currency by 60% when Roosevelt took out the gold clause on Treasury issues in 1933 and raised the gold exchange price from $20 an ounce up to $35 an ounce. That was one massive monetary regime change. The other big monetary regime change I already touched upon was in the late 1960s. The Bretton Woods gold exchange standard was becoming very disadvantageous to the U.S. Government. The U.S. Treasury was experiencing huge outflows of gold out of the U.S. Treasury. First, Johnson had to remove the amount of gold that the U.S. had decreased to such a point that by 1968, Johnson had to remove the gold backing of the dollar very quietly. And then in 1971, Nixon had to take the U.S. off the Bretton Woods gold exchange standard and revoke the $35 exchange privilege for foreign central banks. So the thing is, that was a monetary regime change. And of course, gold, again, was one of the best performing commodities went from $35 an ounce, peaked out at $850 in January of 1980, I'm sorry. And of course, the late 1990s, again, radical period of commodity undervaluation, huge period of speculation in stocks, the dot-com bubble. And what happened previous to that, between 1997 and 1999, the Asian currency crisis, where, it's amazing, like the South Korean won fell by 90%, the Indonesian rupiah fell by 90%, the Thai baht fell by 90%. And then what happened is that every one of those Southeast Asian countries, including China, which didn't value, but what they did is they suppressed their currencies at radically undervalued levels, to the point where every one of those countries swung from running current account deficits. By 2002, 2003, they were all running huge current account surplus. Again, it turned to be massively positive to gold. Gold went from $250 an ounce at the bottom in the summer of 1999 up to 1900 by 2011. So a monetary regime change is coming. One of the things that's pushing the gold market right now is central bank buying. Central bank buying has just exploded in the last couple of years. And we have a very interesting divergence in the gold market today. Westerners are bearish, and it's